All right, it's 6 p.m. over here. I assume it's noon over on the East Coast. Let's get started. Let's get this show on the road. Thanks again for showing up. So today, once again, we're here to talk about how to make life-changing money from crypto in 2021 and cash out right at the perfect time. Yep. Easier said than done, right? So the whole idea is about, even if you're just starting out from nothing and don't know anything about blockchain, which coins to buy, relying on luck and all this jazz, right? Listening to your cousin's former girlfriend or whoever, and wasting immeasurable hours doing endless research online, right? So we're gonna do this all in a systematic way, without relying on luck and all that kind of jazz. So unless of course you have a masochistic streak, or you're obsessive fanatic like me, who really doesn't have anything better to do on the weekends. So all right, let's get going. Crypto System Masterclass Webinar 3, turning an edge into a system. So this webinar today is really all about turning an edge, like we discussed in the previous webinar, into a full-blown trading system. So please fasten your seatbelt, return your trade tables to its upright position, and keep your hands and feet inside the vehicle at all times, because we're going to be blazing through a lot of material in the next hour. You guys pumped? I'm pumped. Actually, also worked out before, so I'm definitely pumped. So let's recap. So far, we've discussed or discovered two big things, okay? The on-chain matrix, right, provide a highly accurate picture of market phases, much better than traditional moving averages and price-based indicators. So, and by the way, there are a bunch of different ones, which provide an accurate picture of the respective market phases, like as we have defined them, much better than the stuff I've used in, through my career, like traditional moving averages or crossovers, Donchians, MACDs, stochastics, retracement levels, my own price-based net lines, that I've been using for a long time now, or any other price-based indicator. And simply, honestly, it's a game changer. This is on a different level. And the second thing really is momentum, right? Holding the strongest assets in the bull market, it is a strong edge. And it means that the best assets to hold in a strong directional market are the strongest assets. You think that would be common sense, but you're surprised how often this basic rule is being violated. So you measure all available assets, right, via a ranking system. And we talked a little bit about that last time. And then you derive the top dogs, which are the ones who are most likely to continue being top dogs in the future. And there's a reason. Because, people bet on winners, be this on the horse track or in Vegas, right? Man, I miss Vegas, by the way. Not the gambling. I'm not a gambler. I just, enjoy having a blast over there once in a while. Good thing about living in LA. Anyway, we can see this edge, in countries, in stocks, industries, commodities, and of course, in crypto, right? And that's why we have sectors like the Dow, SP 500, NASDAQ 100, all these indices, they all exist for a reason. Because, nobody cares about the losers, right? But there's a problem, right, that we need to solve in order to build a system out of this edge. And that problem is non-trivial. The problem is alt seasons don't last forever. It's sad but true. But most of the time, holding Bitcoin or Ethereum is actually a better investment. But on those rare times where altcoins, the alts outperform, they really do magical things. So what we're really talking about here is alt season. Alt season is this particular time when altcoins as a whole, as a group, right, outperform Bitcoin, and where it's better for you to hold, top performing altcoins instead of Bitcoin or Ethereum. They go crazy. They just go to the moon. We've seen it, like ETC this week, right, which just went exponential. Now it's not hyperbolic. Get your trig functions right, people. So the sad thing is that these altcoins, these altcoin seasons, alt seasons, right, do not last forever. But on those rare times where altcoins do outperform, it's magical, right? It's magical things, and they're just a better investment. Okay. Yeah, like unicorns farting rainbows, and the farts smell like jasmine. Yep. Or shit like this, right? There's a snapshot I took on Friday, Friday morning, and I also posted a Loom, which is like a quick, drive-by video recording of my smaller cracker account over on Facebook and YouTube. And you don't see this kind of stuff very often in the stock market. This happens all the time, right? So let's look at some past alt seasons, right? And we can figure out how we can accurately isolate those seasons. So in the original one, right, original bull market way back in 2017, Ethereum went from 7 to 400 without as much as catching a breath. I mean, this is beautiful, right? I mean, I'm straight effing up, to the moon, right? And very few pullbacks, very clean, very easy to trade, no heartbreak there, or nail biting. There's no nail biting involved here. Maybe a little bit up here, right? Is it gonna fall? But otherwise, just a straight shot, right? It's beautiful. Oh, somebody says volume is low, but audible. Okay. Okay, I'm not sure how to fix that. Sounds good on my end. Okay, maybe you need to turn your speakers up. Anyone having problems with the audio? All good here. Okay, thanks, guys. My heart stopped there for a second. No technical problems, but so I don't know. Were we done with the slide? Yeah. So very few pullbacks, all clean, right? And Bitcoin topped on December 17th, actually. Right? Topped on December 17th. And that's crucial. This is crucial. The alts actually kept going, which is a common behavior. And we're going to talk about that in a minute. For example, TRX, right, Tron, went from 2 cents to 22 cents after Bitcoin had topped. And that's a 10x, right, in 2 weeks. And how often do you see this? And this kind of stuff in stocks. I'll tell you how often. Never. Okay. Someone is going to post a chart here in a minute, right, in the comment section. But Mo, back in 2011, XXX pushed 10 times in less than a month. All right, yeah. Probably somewhere this has happened, but this is an exception, right, guys? In crypto and in alts in particular, right, this is normal. This is still normal, at least during alt season, right? So OMG went from $6 to $34, right, in 3 weeks. 3 weeks. Can anyone guess what I said when that happened? Right. So, I mean, it was volatile, yeah. But I mean, see, these gains happened, in 3 weeks, and then since then it's just like, hasn't done much, right? So this is really critical to understand. In the final few weeks after, of 2017, after Bitcoin topped, altcoins made on average 30% in 2 weeks. I mean, hundreds of percent, 300%, sorry, in 2 weeks, 300%, not 3%, 300% in 2 weeks. And that's hundreds of percent a week. I mean, it's beautiful, right? Beautiful, right? But it's not. And this is also critical to understand. They crashed by an average of 98% per away. So, up and down. And that's crucial to understand. I actually hope you don't know that feel, because, I mean, in stocks, a 50% slide, it's considered a wipeout. 98%, and that's prison rape. I mean, you're going to feel it for a while. Is there anyone in here who has experienced that in 2017 or 2018? Anyone? Hands up in the chat section, if you like. Nobody? Okay. I guess you guys were spared. Anybody? Nope, nobody. Good. It's not a good experience. They're up, but let's keep going. All right. So, and the behavior was universal. There was no escape. And this really was a universal phenomenon amongst all, the major altcoins, except actually across the entire altcoin sector. So if you were vested in alts, you got the gorilla treatment, big time. I mean, look, this is actually what here is Bitcoin topped. And then, as you can see, almost universally, the entire altcoin sector, right, goes on a rampage. And for 2 weeks, it's all, unicorns and rainbows until, about New Year's Eve here, I think, right? New Year's Eve here. When things start a bit to slow down a little bit. And gravity takes over on January 15th, around here. So they lost over 90% of the gains. And most of them have not recovered. Some have, but most of them haven't. So why does this happen? Will it happen again? How reliable is it? And most importantly, right, can we develop rules to not get fucked when the music stops? Spoiler alert, yes, we can. So, of course, a good question. It's a really good question, of course. Not because I say so, and I want to make myself feel smart, because it's, identifying recurring market behavior and building edges around it. That's really what it's all about, right? So we did an analysis of every mania-driven bull market in the last 100 years. Oil, corn, wheat, soybeans, .com, real estate, gold, silver, plenty of examples. Every single time, one part of the market top and then another part got going. So we got residential real estate, it stopped. Commercial kept going. Silver stopped, gold kept going. Crude stopped, nat gas kept going, corn stopped, wheat kept going. Bitcoin stopped, and altcoin kept going. You get the idea. This market, it marked the absolute top. And in every single blow-off top bull market in the last 100 years, right, this marked the absolute top when there's this last little, push to the upside from a different sector. And so, the old expression, right? A rising tide, floats all boats. And toward the end of the bull market, we are starting, so winners and losers separate. And quite often, if not always, there's some kind of sector rotation. Again, not unlike what we're seeing in stocks right now, right? Tech finance. Wonder what comes next. I think that's different though, because a little bit different, because tech and finance are the main drivers really of this market and have been for, well, I don't know, for the last year minimum, right? Either way, we can probably agree that this is a very reliable behavior. You remember the metals bull market of 2011, right? Here it is, right? And come on, I'm admit, most of us are, old enough, right? So here's an example of what I'm talking about. The PM market was going really gangbusters at the time. And then silver topped early, see right here. But gold kept going, right? And not just that, it produced another 20% gain, right? Before it then topped as well and then started, winding down. And that was beginning of like a 7-year-long bear market. And, precious metals still, are starting to recover. Back in the days, I was actually tracking the gold-silver ratio all the time, if you recall, and it was for a reason. And then we had the property bull market of 47, right? As you can see, there was a residential property market top, but commercial properties, the commercial property market, the commercial property continued to push higher for several more years. And yeah, we won't see that in crypto now, oh yeah. Everything happens in a matter of days at most, which is great when you're, impatient mofo like me. So everything happens in like weeks as opposed to years. I think 1 week's like 1 year in crypto. And yeah, of course, we saw the same over in crypto. In this case, the tops were only a few weeks apart, as I just insinuated, right? Everything happens a lot quicker in crypto. So turns out this effect is observable for literally hundreds of years. And it was first discovered by, Charles Dow, the Dow Jones guy, and it's now called the Dow theory. So conclusion, at the very end of the bull market, it's highly unlikely that all components like Bitcoin, Ethereum, alts will top together. our market timing filter needs to take this into account, or we risk missing out on the last and strongest phase. It's not that difficult to build a momentum system that catches the bulk, of the market. But at the end, the very end, everything goes crazy, and at the very end, you are starting to make huge amounts of money, right? I mean, my account right now, you've seen it, right? I posted a video over on my blog on YouTube. It's just printing money like the Federal Reserve. The biggest one is back at 560,000, after some money was taken out. And if this goes on like this, it's going to be at a million again by early summer. But in the interim, it's going to be a very, very stressful time, where you see a lot of volatility. I mean, we had some, in the last week. It's going to be crazy big wins, $1 million days, $1 million losses, perhaps, hopefully not. It's going to be absolutely crazy time. And we really need to, we need rules to keep this under control, as it will be really an emotionally very taxing thing. So this brings us to the next problem. How do we quantitatively identify seasons, alt seasons, especially alt seasons? We do it like scientists, not like astrologers. And not by, reading tea leaves or, by asking Pomp or his crew either. We need something that actually works. We need to do it like scientists. And, we have a theory that we come up with, and we try to prove ourselves that this theory is either good or crap. And if it's not true, we discard it. Otherwise, we use it. And we do this until we have sufficient confidence that, we're onto something. And this is really an important question, right? And to understand why, let's look at Crypto 20, which is, an index. We talked a little bit about it last time, of the top 20 altcoins. So this is around February 2018, by the way, slightly past the end of the previous bull market, right? The big one. You've seen the slide last time, I think, but we'll drill deeper this time. Anyway, you can see that it crashed, right here, and then had a brief bull market, here, pop kind of up. And then it sold off again, right? For the rest of the year, then had a moderate bull market, if you, would call it. And then it just kind of did nothing for a long time, with brief positive periods in between, here and here. And finally, here we're in early 2021, after capitulation, down here, and the capitulation bottom. And right now we're in what looks like the early stages of another bull market. I mean, as a whole, there are, alts, they're not good investment. They suck, they suck to own. And with, brief little periods when it's great to own alts, right? Is there anyone in the comment section here in the chat who's been trading alts all through this in 2017 and then into 2018? And if so, have you been holding all the time? Anyone? I have, yes. Yeah. Hey, Ryan. Thank you. And how did it feel? It must have been brutal holding through all this. Crappy. Yeah. Yeah, it's no fun, obviously. I mean, any system, any self-respecting system trading crypto, or especially altcoins, needs to be able to sit this out, because it's just, doesn't make any sense. 80% drawdowns, he says. Yeah, I know how that goes. Yeah, absolutely. Yeah, I've been there too. Yeah. Hodlers will get destroyed, says Bill. We shall see. Eventually, they always do. But then, it always pops back. So let's pick some names of altcoins in the chat, and let's load up some. And don't give me the best ones, okay? Just any ones that you've been holding. Like Laura says no. Okay. Okay. EOS. Okay. Let's do it. EOS, Bitcoin. All right. So yeah. So here's one that kind of came back from the dead. Did exist in 2017? Oh, that was a good one. Thank you. Okay, we get to that. That's a good one. Thank you. I love that, because, a lot of people look at charts, and then we just looked at this, right? And said, oh, it looks pretty good, right? And then look how it used to look like. This is April 2018. It's actually a late bloomer we have here. Yeah, it's a late bloomer. Did it exist in 2007? Oh yeah, that's maybe why. It had not popped its cherry yet in 2017, it seemed, right? It came into existence here. And then you see it's just brutal since then. And when you kind of scroll over here and say, whoa, let me zoom out again. It's like, oh yeah, it's running up, man. It's a great coin. But is it ever going to go back to what it used to be? No. Okay, so we have DOT. Right. And do I have the Binance one? Yeah. Yeah, it wasn't around. I think that was around in 2017. Was it around 2017? Bitcoin, yeah. Let me look. Maybe at Bittrex usually has more data. Yeah, a little bit more now. Okay. Fatcom. XCM. Okay, let's pull this one up. Okay. That's just a horrible looking chart. Ryan, have you been trading this one? Do you like roller coasters? Okay. Yeah, this is, and here again, it has these brief points in between, but even right now doing alt season, it's not doing very well. I mean, it kind of fell apart here. And that kind of speaks to our system as well, right? That we don't hold them for very long. ZRX, okay, let's do one more. ZRX. ADA, we looked at ADA last time. Yeah, wow, this is a great chart. That's a great chart. Thanks, JT. So why? Because, look what it does, right? You actually get a little bit of a double top here. Wow, one more last hurrah. And then it's just ugly, right? And you get, and not only do you get the, emotionally taxing, slow drain, towards the bottom, you get these follow-up spikes that get everyone's hope up and say, it's coming back. And no, it's not. And then look where it is now, right? I mean, is it ever going to come back? I don't think so. Okay, so let me go back to the presentation. Okay. So here's one, Sushi, right? Another one, which is a popular shitcoin right now. And as you can see, it was a horrible investment in the fall of 2017, right? I'm sorry, for 2020, in the fall of 2020. And then it kind of started to recover a little bit, see over here, in November. And it pushed higher on what I would call a pretty smooth advance until, this February when it kind of returned back to its former shittiness. So here's Polkadot. I think some of you guys, somebody wanted to see that one, which I think, I guess everyone loves. A great investment in 2020 if you happen to be a masochist, right? But it does turn around early this year. And as you can see, that advance here only took 2 months, only 2 months. And since then, it's pretty much flatlined, right, in a high volatility sideways pattern. Right? It hasn't really done much. ZRX had an incredible run in late 2017. Then, it sells off really hard, has another incredible run. Like, I think we just looked at that one, right? Didn't we? No, that was, JT's. That's JT's ones. So, here we go. We talked about one. So, it's a pain. It has some good times in between, but mostly these coins, they're mostly shit, right? With some brief hurrahs in between. That's when you want to own them. So, there's a loaded question, obviously. What did you notice about these charts? Please type your observations in the chat if you could. Anyone? Bueller? Anyone? No observations about these charts. Waste of time, okay? Really, really hard to trade. Yes, Mika says volatile. Oh, really? Yeah, very volatile. Yeah, exactly, Mika. It's, I don't know how people trade them, honestly, unless they have some advanced tools available. Untradeable, more shit than stuff. Blast up and decay. Fast up, slow down. Or actually, some of them fast up, fast down. Well, without your system, perhaps, EP. So the one thing, about this release that comes to mind is investors say they want a love affair, right? They don't want a love affair, but in reality, they keep seeking out these one-night stands, which are these, these altcoins. And why? Because it's kind of like an idea virus. People fall in love with it. It becomes almost a religion, right? People become almost like disciples about it, and which is usually a bad idea. If you fall in love with your own ideas or somebody else's ideas. So if we want to see things very clearly, we can take the market cap of crypto as a whole, and we divide it by the combined market cap of Bitcoin and Ethereum. And we're going to get to this formula, which in TradingView is mentioned on here, right? So, what we're doing here basically is we're taking a ratio of small caps, right? This is the ratio of small caps in relation to the big caps. It's a pretty simple concept, really. What we do is we calculate the market cap of Bitcoin, and then we add to that the market cap of Ethereum, right here. And that's our combined big caps. It's big caps. And then do we take that, right? Do we take the market cap of everything but Bitcoin? So everything but Bitcoin, which is this one. So the altcoins and all the other stuff. That basically defines our alt caps, right? Our small caps, alt caps. I like that one. Our small caps. And then we divide that by the big gaps we just calculated right over here, right, on the right. And why would we do such a thing? Well, simple. Remember, what we want to do here is, we want to know about the periods, the altcoin periods, which outperformed, the two major coins, which are clearly Bitcoin and Ethereum, especially Bitcoin, right, and then Ethereum. And the way to do this in TradingView, right, is as such. You can, find the magic formula right down here on the bottom. And if you copy that and post it right into the symbol box in the top left, on TradingView, then basically this is what you get. This is what comes out the other end. You paste that formula right here. So take this formula here, copy it exactly, and paste it up here. Right? I could do it right now, have it open, but I don't think it's really necessary. And you can clearly see, right, that there are times when holding alts are good. And this is how we actually came up with this. Right? These are the times we want our systems to be active. We want to be active here, 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 and here. We want to cherry pick. And there are, many ways to skin this cat. You could use some moving average crossover, Donchian channel, stochastic, MACD, SQN, system quality number, or some indicator you like, right? Whatever floats your boat. But honestly, though, if I had nothing else, and I do, I would simply just use the spike high-based approach, just like when I, when I take breakout entries or when you're a speculator. I think that probably would work better, right? Just like, if there's a spike high here and you take that one. It's late, but it's better than nothing, right? However, that said, the inherent problem of all these approaches is that they are often, if not always, lagging. And I'm not really worried too much about that on the entry side, honestly, but I am very much worried about that on the exit side. We don't want a situation where they are lagging because they spike so fast. They run up and then they reverse so quick, and even missing the top by a week can be deadly. By the time fancy indicator finally flags, keeps going down, your account may be down already 30% or 50% or more. We don't want that, right? So can you see that the whole game of crypto trading is to only trade alts during alt season? I think that's something I really hope has sunk in at this point, because it's really crucial. I'm going to grab my sweater here because it's getting cold again. Aside from alt season, you really just want to trade, you just want to trade Bitcoin or maybe Ethereum. So now this chart, right? I want this to be really clear. It's the market cap, right? This is the market cap of everything except, Bitcoin, divided by the market cap of Bitcoin plus the market cap of Ethereum. Let me get into my sweater here. So what's the front? There you go. And what we are effectively doing, right, is calculate a ratio of small caps against big caps, right? Clear? Right, that's better. Yes, it's still cold in Spain. Spain is not a warm country, actually. Only it gets super hot during the summer, but usually, otherwise, I prefer California. Okay, so there are two ways to identify alt seasons. Way one, chart of altcoin market cap divided by Bitcoin market cap. Okay, so what I just showed you, that was the vanilla version. Okay, and we've gone through that. We know we want to trade right here. Works fine, and that's not too bad. But by definition, any indicator you place on these is going to be lagging. Moving average, Donchian, whatever we have you. So meaning right here, if you place an SMA, let's say, okay, here, right here, see the mouse here. If you place an SMA here on this signal, then it's most likely not going to switch off until maybe here, down here, and by then you end up giving at least 20, 30% back easily. And a better way actually is by using one of the on-chain metric companies. And there are two big players in the space. There's Glassnode and there's Quant. And both are actually excellent. And there are multiple ways to achieve the same thing. I actually use both in my systems. And Glassnode actually is extremely expensive. It runs you like $700 a month. For us, it's definitely worth it, right? CryptoCant is okay. It doesn't have a lot of things that Glassnode has, but it's fairly cheap. We use both. We use both in our system. By we, I mean Scott and I. So, but we have to understand why alt season happens before we can predict it, right? And this is how it works. The history lesson. Don't charge extra for those. Remember him, right? Alan Greenspan. At the peak of the prior bull market, everyone will be feeling what Alan Greenspan called irrational exuberance. A period of irrational exuberance. I remember this guy. And, does this resonate with anyone? Does this resonate with anyone? What we're talking about is people taking leave of their senses, right? Just going completely mad. Doubling down on, trading altcoins, mortgaging your house. I've heard stories, to buy more crypto, quitting, your day job just to trade cryptocurrencies, et cetera, et cetera, You get the idea. And so does this resonate? Yeah. I feel like we're here now. So do you ever think, this time is different, or this will go on forever, or I can make a living trading this? The last one really is the key phrase, right? I can make a living trading. It's when you hear people say, hey, why am I wasting my time trading, traditional stocks or options or going to work, right? I can just do this and make 20% and 30% each week, And once I hear that, I start getting a little bit antsy. So I hear this once in a while, but I don't hear it as much yet as I heard it maybe, back in 2017. So here's a simple 3-step program to fuck yourself if you're interested. Traders make profits with Bitcoin. Traders reinvest those profits in bigger altcoins like Ethereum. And traders start to believe their own hype and then transition, into even riskier, smaller altcoins. And then you get fucked, But hey, don't worry, everyone else is getting fucked too. So, you've got good company, over in, Zero Hedge or, Reddit or crypto, and then you go to crypto purgatory. Right? Yes, it exists, right? That's where people like Pump go. So, Ethereum is sort of a gateway drug to shitcoin addiction, right? I mean, you start taking half of Ethereum, just for fun, or, because of, all your friends or colleagues maybe at work, right? They're doing it as well. You can lose, right? This thing keeps just going up and up and up. But once you, popped your altcoin cherry, then you start looking for the next Ethereum, or the next Bitcoin. And, people telling you this is going to be the biggest thing since sliced bread. And there are literally thousands of these shitcoins out there, across dozens of exchanges. And it doesn't take very long, really, until you're slinging, altcoins like a mad monkey. And before you know it, you appear at, 2 a.m. punching your laptop because, dildo coin or whatever it is just got, cut it in half in one single session, and took maybe most of your trading account with it. If you because position sizing, some people might not be aware that such a thing exists. So what ends a mania-driven bull market? It's like, as I said last time, it's like having sex with a gorilla. It's over when the gorilla says it's over. It's just a little bit like the stock market right now. I mean, would you think it's overvalued, the stock market? Hell yeah, it's overvalued. It was overvalued years ago, but it's not stopping. And the zero hedge doomsters continue to be wrong for going 12 years now. One of these days they'll be right, of course, and then they'll make sure to rub it in all the way and tell you that they knew it all along and predicted it a long time ago. But even a stop clock is right twice a day. Anyway, bull markets really have to play themselves out, and they do it on their own time. Especially in the current environment, the bears they're basically non-existent. So, what ends the mania-driven bull market? Bull markets end in general when they run out of new buyers, and not when they're overvalued, overbought. Right? It's a silly concept: overvalued, overbought. There are basically two types of market psychologies. One is the value-based market psychology, right, which is the more traditional model. I have an old car or boat to sell, and then I offer it out there for some price, like a price of a new one. Then nobody's going to buy it. But if I want to get rid of it, and let's say, okay, get rid for $1,000, then most likely I will find a buyer willing to deal, with a little bit of rust here and there, and scrub it off and wear and tear. And kind of that is value-based psychology. By the way, as a side note, here in Spain, people are really weird about this stuff. They keep selling Android phones for several years old, just 20% down. I don't know. It's really weird. Makes my head scratch. But still trying to figure it out. No offense, Roberto, if you're here. The other one is the greater fool theory, right? Just look at what's going on in the Bay Area right now. I mean, just the other day, I come across this news showing, I'll tell you where, showing that properties on the East Bay, right? The East Bay is the West Bay, East Bay. I used to actually work in the Bay Area. And on the east side of the Big Bay, houses are now going for like $1 million overpriced. They're not going for $1 million. They're going for $1 million overpriced. So if your house is listed, let's say 1.5 million, or I don't know, 2.5 million, they get an offer for 2.5 million or 3.5 million. I mean, that's insane. There's literally so much money flowing around in the Bay Area. They don't know what the effing do with it. Nobody knows when the big foot drops, obviously. I mean, I'm an idiot. I lived there. Seriously, I am. Because I lived there in 2000, until 2000. And I thought 500,000 in the Bay Area was a lot, was overpriced. Ha! I mean, I should have bought several at the time. Those same guys probably go for 5 million plus now, the same houses, right? Palo Alto, Sunnyvale, well, maybe not Sunnyvale, but, I mean, it's crazy, Cupertino. So this is going to continue for, until one day, one magic day, maybe tomorrow, maybe 10 years from now, I don't know, when the last sucker pays a lifetime fortune for a house that he's then trying to flip, and hey, he's not going to get any offers or really bad offers. And so he lowers his price and maybe finds a willing buyer, but then this may actually start a chain reaction, and where others, have to lower the price as well. And, before I know it, the entire real estate market collapses like a California, mud hill, and it's done, right? It's gone, just like back in 2008, right? Remember that? So, good example, the housing bubble, 2007, 2008. And, why? Because everyone who could get credit already had a house. The outcome bubble in 2017 ended because everyone who knew about crypto and didn't think it was a scam was fully invested. They went all in already. And, that was the top when they all went in. By the way, let me read something to you. A very good friend of mine wrote me. You might know him. He lives in the Bay Area. It's a hit. And, he told me, let me tell you something about me that aligns closely with what you've been talking about. 100% of my wealth is from sources that I wasn't able to sell. My house, I've made millions. I have to live somewhere, so I didn't sell. Smart man. Our rental properties, I could never sell them. They pay cash every month. and they've gone way up. My venture investment in a startup, it was worth 7 million when I invested, and it's worth over $500 million now. He came, this says I came, he came this close to dumping, it says I came this close to dumping my entire stake for $100,000 in 2008, but no one was buying. I got lucky there. So this is, this is for real. This is the mentality, right? And it's not unique. So once we understand this behavior, that the game ends when nobody has any money to buy anymore, then we can figure out objective measures to work out when traders have to run out of money. And we definitely can, because it's all on the blockchain. And we can do it in a very high level, with a high level of precision, and then jump out at the right time. That the game ends when nobody has any more money to buy more. That's the one thing you need to take away from here today. The game ends when nobody has any more money to buy more. And then we can figure out objective measures to work out when traders have run out of money. Right? Then we can get out right at the top. Now, we get to the crux of how this works. Traders make profits in Bitcoin. Traders spend those profits on alts. Those alts go up until nobody has any spare cash, to buy altcoins without doing what? First selling a different altcoin. It's one thing to say, I'm going to take some of my Bitcoin or some of my cash and buy alts, right? Maybe I just got a bailout. Many people did. That's bullish behavior, right? But when it comes to the stage when the market is so saturated with people all holding alts, with them fully invested, right? If the only way they can buy more alts is to by selling another altcoin, that's really when the cracks start to appear. And from there, you literally only have days to GTFO, right? So timing exact tops in Bitcoin is actually way easier than you think it is. Here are 3 different ways, and all work equally well. I know, famous last words, right? So they all work on the principle of measuring paper profits versus realized profits. Paper profits versus realized profits. And what I mean by that is, if you bought Bitcoin for $1,000 long time ago, and now it's internet time, right? And it's now at 50,000, right? It's more than that today, right? Then you basically have what? 98% profit, right? I'm not saying that you have 98% profit, actually. In fact, you have a 2.5 million % profit, which is insane, but it has happened to a few people. What I mean is, from the $50,000 in the account, if you have one Bitcoin, right, 98% of it is in profit, is from profit, right? Paper profits, that is. And the theoretically highest possible number of that would be 100%, right? Which won't ever happen, but you get the idea. And if we, for instance, right, bought every single Bitcoin on the market today and gave everyone back their original investment, how much profit would there be? Compared with the overall market cap, how much profit would there be? And there are actually 2 ways to slice and dice this one. You can either calculate how many accounts are profitable right now, right? That's one good metric. Or you can calculate what the average profit or loss is of all accounts, of all those accounts is. And one is a simple, yes or no proposition, profitable or not profitable, right? Black and white. The other one is some kind of number, right? And if you take that number and divide it by the market cap, then you arrive at, sort of an oscillator that ranges between, 100 and 0. Makes sense, right? But finally, right, after 2.5 webinars, right, we're getting into the meat of all this, right? So this is what you guys have been waiting for. And with the magicians, what they call it, first the pledge, then turn, this is the prestige, right? It's how we do it, right? We're doing it in a clever way, and that produces a consistent edge. And that is really the real magic. Anyway, so here what we have is the MVRV score, right? That's basically market value versus realized value. That's the score. Looks a bit like the VIX, right? Doesn't it? And what we have here is basically market cap. You deduct subtract the realized cap, and then you divide that by the standard deviation of the market cap. Right? And what comes out is what we call the z-score, the MVRV score, right? MVRV z-score. And I actually wrote a post on z-score a few months ago, so maybe you want to check this out. But simply put, what is z-score? It's also called a standard score. It gives you an idea of how far from the mean a data point is. Right? But more technically, it's a measure of how many standard deviations, below or above the population mean the raw score is. So these scores here, right? The higher they are, the further away they are from the mean, right? Of the population mean. And as you can see, that's a lot of standard deviations over here. A lot of standard deviations. And that's why here, this is a good example. Not the only one, but it's a good one. So why didn't we think that we were near a top about 2 weeks ago? When the crypto market as a whole corrected lower. This is actually why. Okay, I want to make sure everyone really understands this. Is there anyone who needs me to go through this again? Comment section, raise your hand. Okay, all clear. All right, yes. Okay, so Bill, all cool. Oh, okay, so I don't have to explain it again. All right. Well, somebody raised their hand, so I'm sure. Okay, let me explain it again. If you take the market cap, if you count together all the value of all the coins in existence right now, right? And that's a number. No, it's okay. Bill, there are no dumb questions. Right now we have what, 18.5 or 18.6, I'm getting to that, Michael, 18.6 million coins that have ever been mined. And each of these coins, they're worth right now, right? What is it this morning? 68,000 something, right? 58,000. No, 58,000 something. But so if you add all these coins, right, 18.5 million of them, you get a big number, like over here. See on the left here? So that's basically what you get at, right? So several billions and millions of dollars. And then what you do on the other side, let me actually go back here so you can see realized cap right here. The realized cap is, imagine you bought a Bitcoin a year ago, or let's say 6 months ago, right? And it was $1,000 less than today, right? Then, well, you made $1,000, right? You bought it for 1,000, and now it's $1,000. I'm sorry, for let's say 57,000, and today you bought it for 58,000. So what is your realized, return? Realized return is 1,000, right? And so what we do then, we take all the coins that are in existence, 18.5 million of them right now, and we take each of these coins and we figure out, how much realized value they have, right? Starting from the day they were created. The first ones were created all the way back in 2011. And up to today, and that you count all that together, and that's basically is your realized cap, and then you divide the realized cap from the market cap, right? And then you take the standard deviation of the market cap, and then you get the z-score here. I hope that makes more sense, right? So where was I? So the orange line here, right, is really, that's the realized cap. We talked about that, right? Just explained that. And if you take each Bitcoin ever mined, and again, deduct today's price from the price at the moment of its creation, that is basically the realized profit. And if you add all those up, you would get the combined profit, of all Bitcoins in existence. And the other line here is the market cap, which is basically the combined, market value of all Bitcoins in existence. And as you can see, when the orange line, the realized cap, right, drops below the market cap, right here, for instance, right, then what does this mean? What does this mean? Well, this means that there are more Bitcoin holders who are sitting on a loss than there are Bitcoin holders who are sitting on a profit in their holdings. And inversely, if the orange line, actually it's the other way around. Sorry, I actually got tripped up. If the orange line is above, then more people are losing. If the orange line is below, then you're sitting on profits and you're holding. So inversely, if the orange line, okay, I took some notes here because this is quite a complex subject. Make sure I got it right. So then we have the z-score, and that's basically based on this particular formula. And honestly, the difference here is really day and night, right? I mean, I'm sure you would agree. How did we know it wasn't top wasn't in place? Because of this reading, right? And because it's not anywhere near extreme enough. And that doesn't mean we're not getting 10 or perhaps even 15% corrections. It doesn't mean that. We get those, but nothing like what we've went through in 2013 or 2013, after the 2013 or 2017 bull markets, right? And so the other thing I want you to note, right, is that it also catches market bottoms, right? See how it catches the first bottom over here on the left, and it does again in 2015, and here again in 2019. And then again in 2020. So altogether, it caught for market bottoms. By the way, this is not necessarily the be all and end all. There are plenty of ways to skin this cat. Right? This is just one. Okay, but I really like the z-score. It's a good measure. So consider realized hodl waves. That's another one, right? Because the information is stored on the blockchain, and we can work out how much profit is held by traders who have held, for instance, a week, a month, a year, 5 years, etc. And this is it, right? This is called realized hodl waves, and this is based basically on what long-term traders are doing. So look at the area that is circled up here. These are traders who held for 5 to 8 years. Guys, these are hardcore hodlers. I don't know if there are any among you. These are hardcore hodlers. They bought Bitcoin. Bill says, "Wow, pretty." It is pretty. I love this. I love this nerdy stuff. These guys, they bought Bitcoin way back when it was, only a couple of bucks. And these guys only sell when they think that things have just gone completely out of control, completely bonkers. And they feel the hassle of unfreezing the assets. Well, we talked about it last time, right? Basically bringing it out of cold storage in many cases, that this is really worth the effort. And this right here basically marks the 2017 top. And if you imagine how that 5 to 8 years group starts to exist right here on the left, say right here, then bottoms out right here in early 2017, then goes to almost zero, right? It almost precisely marks the top. I mean, it's effing uncanny in my mind. But it doesn't end here. If you look at the share of the guys who just bought a few days ago, right? See, down here. Or last week, right? Or last month, right here. When that group starts to explode higher and almost goes vertical, right? That also marks the top pretty precisely. And think about the psychology between those two groups. The guy who bought it at 2011 or 2012, he bought it at $10, or perhaps even $100. I mean, wouldn't you have loved to buy Bitcoin at $100? Who wouldn't have, right? Well, people didn't think that in 2012, right? So how often do you think that those guys who actually did are checking their accounts? He frankly doesn't give a rat's rectum in my mind. That guy here who bought it last week, for $50,000 or more. I promise you that he checks the account on a daily basis, right? Every day. Should I get in? Should I get out? Should I get in? Should I get out? Right? Maybe that guy I told you about, a friend of mine, who bought all the way back in 2011. And he was really fanatic about it. I mean, he's got the yacht, right? He's got the beach house. Swims in pussy up to his ears. And, he never writes me about Bitcoin or asks me where he might go next. He doesn't. He doesn't care. He's richer than he ever thought he would be, for one. And hey, Mofo's not even in his 40s. I hate the guy. Now I left the guy. He's super happy. I'm super happy for him. And I didn't know him back in 2011, but I did in 2014 actually. And he's actually one of the reasons why I bought my first Bitcoin. Anyway, inversely down here on the bottom, let me actually go back a slide here so you can see that. On the bottom, right, if you look at the share, if you look at this, see how the short-term holders, they all disappear, right? They just all went away. So the market really is driven by what the long-term guys are doing. And that really is our job, right? Figuring out what the hodlers are up to. Because when they jump back in collectively, it's really time to buy again. It's time to buy again. Clear so far, everyone? Cool. Yeah, awesome. So this behavior, where the whales sell their coins to retail idiots like us, right, at the height of the madness, then intelligently, I can't even pronounce that word. They buy them back at the lows. This is actually highly predictable behavior. And the problem is that the whales, they can't hide what they're doing. There is really no black pools yet, right, of this kind of stuff. And then maybe there will never be. Maybe they'll find workarounds. But for now, we see what they're doing, and it's very good for us to see, when they go out and when they come back into the market, and they literally leave footprints in the sand, and we know how to read them, which gives us important clues as to when to head for the hills, right, and when to beep 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 beep. Back up the truck again and load up. And of course, it also tells us when to do nothing whatsoever, which for some of you guys seems to be the hardest part. Those graphs actually over at Glassnode. Yeah. Unfortunately, that shit is expensive. I leak some. I might leak some of them out, but I don't think Glassnode would be very happy with me doing that. So, are you ready for some white man magic? What we're going to do, we're going to take the amount of unbanked profit for coins held in 1 to 2 weeks, and then we divide it by the amount of unbanked profit for coins held between 1 to 2 years. And we're going to make a ratio between those short-term and long-term traders. And then this happens. The Rodel ratio. Yeah, I just termed that. Let's call it the Rodel or the realized hodl ratio, right? It's basically the combined profit of the 1 week, 1 week holders, realized holders, profit of the 1 week realized profit of the 1 week holders. So I've got that messed up, and versus the profit of the combined 1 to 2 years holders, right? The realized profit. Clear so far? Makes sense? Short-term profit, realized profit versus long-term realized profit. And yes, Bill. Okay, cool. And if you multiply that by the market cap, which we're doing here, right, then, that normalizes the data. And if you, as you can see right here, the spikes here, right, these spikes, and then the reverses, that's basically calls every single top, right? Spikes above the threshold, drops below. Same here, and same here in 2018. Excuse me. And the same happens on the bottom. Voice is going. See the lower band right here? If it dips below and then reverses back out of the bottom, back above the threshold, that marks the bottom. Not the bottom take, mind you, right? But more than good enough to, get you back into the game early enough. That's really what you want, right? We're never going to catch the very, very bottom. It's just forget about that. Oops, up. Let's go back. So let's do a little poll. Who coming in today thought that crypto was way riskier than real markets? And, okay, me, says Jim, absolutely. Yep, everyone seems to agree. But, okay, now who still thinks that? Does anyone still think that? Ernie still thinks that? Really? Not sure what I think now. It's a good answer. Ernie says no. He corrected. All right. Laura says no. Hey, Laura. She's a long-termer, I think. Grant, you can build a trading system on this info. Yes, you can. I mean, that's the idea, right? I don't. Visibility is a game changer. Yes, exactly. You guys get it. Oh, guys are so smart. So when I started out in this project, I still really thought, like you guys, that the crypto markets weren't ready for prime time. You couldn't really take any of this seriously. It was just a fad. Maybe not a fad anymore, but people would get slapped around, and it was just impossible, right? Super risky, like you mentioned before, one of you guys. You just can't make any money with this because it's just too crazy. And that's what I thought before. But after, doing all this, a lot of research, and not just that, after actively trading it, I really changed my tune, obviously. And the old mistake I made, you might guess made as well, is to confuse volatility with risk. The two do not necessarily equate. Not if volatility works in your favor, of course. And if you're able to exit in grace, right, near the tops and the bottoms, exit in grace near the tops and then get back in the bottoms, right? And this is the reason why people fear volatility usually, because of the risk of getting caught holding the bag holders, right? So what we're trying to do here is this: we're trying to ride this wave, to the beach, get off the board, ride the perfect time, like a boss, right? And that's it, And who here thinks that we can do that? Anyone thinks we can do that with base team? I know you can. Thanks, Bill. Appreciate the confidence. I better live up to that, right? So, okay, I'm pretty confident we can. 100% we can do that, right? And I'm showing you how. I think it's actually trivial, easy to time market tops in Bitcoin using these, right? Our system uses something very similar, but a little different, because we don't just want to time Bitcoin tops. We want altcoin tops as well. And keep the best for last, of course. I cover that in my next webinar. So we can do basically the same type of quantitative quant analysis with altcoins that we just did with Bitcoin, or Ethereum. And we will get to that next time. Gadget, next time. Anyone remembers Inspector Gadget? I grew up. That's how I actually learned English, watching on Super Channel or something back in Britain. So I'll be covering it in the next webinar. But even if you didn't use it and just used one of these simple methods, you captured the bulk of the gains, right, in Bitcoin. So summary. Where are we? We're 3 webinars into a webinar series, right? 2.5 right now. And here's the game in a nutshell. Let's kind of line this up. Do you have a choice between cash, Bitcoin, Ethereum, and altcoins? Number one, rule number one, right? Tenet number one, stay in cash in bear markets. The only way to win is not to play. Repeat after me. The only way to win is not to play. This is something I've taught on the blog over and over again. If you're being offered a lose-lose proposition, the only way to win, or at least not to lose, right, is not to play. It's simple. We stay out of the shit periods and wait for better times to someday appear on the horizon. That may be weeks, but it might be months, right? And to be honest, this may be the hardest part for many of you guys. I say this as someone who has been literally talking to and advising, in many cases, not professionally, but just, like people bounce ideas off of me, thousands of traders over the past 12 years since starting my blog back in 2008, August 2008. And a lot of guys have a hard time writing profits. Some have a hard time dealing with losses. But almost all of you guys seem to find it impossible to just sit and do nothing. Just watch, right? They find a million excuses, right, to break this rule. And they get really creative too, finding these excuses, right? Which is why exactly we need rules to keep us in the game, because I guess I'm not immune. I'm like you guys. I'm an idiot, right? And I'm like, I want to trade. I want to do, it's worse for me actually, because I have to write about it every day. I mean, can you imagine not trading and writing about the market? It's difficult. I have to keep it interesting, and sometimes I really have to keep you guys in check and say, hey, we're not trading. I'm not trading, and I wouldn't recommend you do it either, because it's just nothing good will come of it, right? And so that's why I've always been such a hard ass when it comes to rules, right? So when Bitcoin goes down by 50 or 80%, you don't want to play. And you want to sit at the beach, right? Sipping daiquiris or mojitos, right? I like both. Meanwhile, everyone else is running around with a hair on fire. You just laugh, right? And look, don't send me emails every day, Mole, are we there yet? It's been 4 weeks. Are we there yet? My answer would be the same every time, right? We have on-chain metrics that will tell us when it's safe to come out and play. Let's come out and play again. So stay in cash and bear markets. You guys get that, right? Let me show you what we're talking about here. We're back in here, right? And when this shit goes back here, then we know that it's time to cash out, right? See? Here's time to cash out, where the block starts. And, we leave the building through the service elevator, and I won't cut, that's it, right? And that's when we go back in, when we catch, that bottom is in place, right? Same here. I think I shifted this wrong. Sorry about that. And same over here, right? In 2017. So tenet number two, when the bear market is finally over, don't buy altcoins. Bitcoin always goes first. Buy Bitcoin. Who made this mistake here? Anyone in the chat section? And it's like, it's time to buy. Let's grab some alts. I did, says Bill. Bill, you're doing it all, right? My condolences. And then you watch Bitcoin, go up from 5,000, sorry, my point, to 30,000, and the damn alts didn't move at all. I mean, anyone's had that experience here? Nope. Okay. You stand alone, Bill. I was there too. Ryan says, yep, the same. Okay, we're in good company, it seems. Yeah. So this is a hard-earned lesson, so please take it to heart, okay? I'm not just writing things down because I didn't just pull it out on my, rounded backside. No, never trade crypto, but have futures and Forex. Oh, yeah, okay. Especially Forex feels a lot like that often. Not as extreme, though, and I thought I would never say that. So tenet number three, during the early stages of the bull market, Ethereum and Bitcoin will change places a few times. Now, this is not essential, guys, okay? But you can squeeze out a lot of performance by switching to Ethereum instead of Bitcoin at the right time. And this is actually something Scott and I are doing. And we're doing it quite expertly, I might add. So remember, we are greedy mofos, and we're hellbent on squeezing every last drop out of this market mania. So that's why we do this. And, it adds quite a few percentage points on top of it. And finally, alt season is triggered by excess unbanked profit in Bitcoin and Ethereum flowing into alts, right? It's mostly the short-term traders, by the way, and we'll get to that in our final webinar. If you've been trading altcoins, then you probably know it's true. Ryan knows it's true. All right, Bill, it's true. When did you guys buy out some altcoins? Did you actually bank profits with Bitcoin, Ethereum before, or did you buy altcoins right away? No, anyone? At the bottom, that liquidated COVID scare. Okay, all right. That was Bill. So, and we have number five. Ryan says wasn't alts the whole time. Yeah, poor guy. Denari says just started buying a month ago. Okay, latecomer. Well, you timed it well. Good job. Alt season will trigger on average 4 times in a bull market. That's an average. Okay, I'm not going to say it's going to be 4 times every time. The final alt season is usually one for the record books. It's crazy. The final round, it's the big blow off top. In 2018, for example, average altcoin, at the end of the 2017 market, the average altcoin did the altcoin, that falls afterwards, did 300% in 2 weeks. I think that was just at the crossover, right? December into January, if I remember correctly. And you got to understand how this goes. That was 300%. You just made 100% in a week. This is not when you want to stop. People are simply not wired that way. I'm not wired that way. You've tasted blood and you want more of it. And of course, in the end, the only blood you're going to be tasting if you become, if you turn into a piggy, is your own blood. If per our plan, by the time we're long cashed out and headed for the hills, that's basically what we're doing this. We want to go up. We don't want the down part. We want to have nothing to do with that. So now let's get really specific about how the market ends. If traders on average paid, let's say $1,000 for Bitcoin, and Bitcoin is trading at $100,000, what we got? 99% unbanked profit, right? 99% of the money in the accounts is unbanked profits. So if traders, it cannot go past the 100 mark, right? We agree on that. But there is a number, there's a number, but it's crazy high. And we're not there just yet, but we are getting close to the end of the first run. Like Winston Churchill said, what was that? It's just not the end. It's not the beginning of the end, but it's perhaps the end of the beginning. It's sad times, right? When a German quotes Winston Churchill. He actually hated Germans, but I really always admired the guy. The guy had tenacity. Somebody's laughing. You beat me to that joke. Okay. You guys seem to be wired like me. I couldn't resist. Anyway, but you get the idea, right? We're getting close, but we're not there yet. So, but what's the number, right? Alts, by the way, are more spread out, but the key number for Bitcoin, it's a little different for alts. It's a bit more spread out. Is 75% of market cap being unbanked profits, somewhere around that number. That's the critical number. And this is the shit you want to write down, guys. This is the shit you want to write down. Grant says, what happens to German Irish? I don't know. You got two problems, I guess. I'm not going to go there. I'm just going to get into trouble. So this is the critical number, 75%. Write this down. And so we're going to look at this here. So how does this work? When the market makes 75% of unbanked profits, right, and then falls, bam, the end, right? In 2011, for instance, right, 2011, the market makes 75% of unbanked profits and then, falls, bam, the end. Once again, here, market makes 75% of unbanked profits and then falls, bam, the end. December 2017, right here. My market makes 75% of unbanked profits and then falls. Bam, the end. Everyone get that? Yep. Okay. It's really important you guys get that. If you look at all these bull markets and don't be fooled. They don't look like much on this chart right here because it's a log chart, right? This is a log chart. I look at it in a normal chart. The bull market over here, right, was actually a lot more powerful than the one in 2007, in 17 in percentage points, right, in percentage terms. So what we're doing here is really time these market tops perfectly, like no fucking around. Right? We have this shit down to a science, and we mark the major tops every single time. We mark it every single time, and right bloody on the nose too, on the day. Not the little wiggles in between, mind you. Honestly, that would be unrealistic. And it's also unnecessary. We don't need that. What we've built here, sorry about that. What we've built here is really a long-term wealth creation engine. That, and not just a crypto swing trading system. That, ladies and leeches, is nothing short of a game changer in my mind. An absolute game changer for crypto trading. So this works because there's a theoretical maximum of 100% unbanked profits. We can see clearly that human greed has not changed much over the years. We're just as greedy and stupid as the monkeys that we evolved from. And that defines our greed to fear ratio right here, right? Which is really what this is, right? When it pushes, and then drops below the upper 75 percentile, that's it. We cash out, drop the mic, and Elvis has left the building. So now, armed with this alone, you can easily and accurately time Bitcoin market tops and bottoms. It's a little bit more complicated with alts, but we will get to that in the next webinar. But even if you don't come to the next webinar, and you're going to come to the next webinar, right? Because like any good entertainer, I keep the best for last. Anyone planning here on attending the final webinar? Yes? Hope so. Everyone raises their hand. Okay, awesome. So, but even if you don't, theoretically, in a make-believe world, you would not attend the next webinar, you can easily buy Bitcoin and time the eventual market top like a magic trick now, okay? I'm giving you all the tools here. And never be the butthurt loser holding through a bear market like a sucker. Never have some smart ass, relative, at Christmas, doing a Christmas party ask, so how is your crypto doing? So I know some people, who are cryptomaniacs and lost almost all they were holding in the bear market in 2018. And they were afraid to sit down with their families, for Christmas dinner because they had told the entire family to buy crypto near the top back in 2017. So yeah, you will never be that guy if I have anything to say about it. Somebody says, looking at the chart, it appears there was a top in 2019 that was below 75%. Let's go back. 2019. Yeah, that was a, we looked at that one, and good catch, Chuck, thank you. This is really where you have to draw the line, right? This was a deep one, but it wasn't one that would have wiped you out, and it was one we could sit through, from here to here. And it's not one we want to catch. We can't catch everything in between because then, where do you draw the line? You have to draw the line somewhere. And for us, it's really, we want to really grab the big swings. And, our system will switch us off at the point when we feel that, when the system feels that, not even Bitcoin or Ethereum to hold that is not a good idea. So that's when we cut out. This is mainly also about, when do we go from Bitcoin to Bitcoin, Ethereum, to altcoin season, and I'm back in cash. And we can't really pin every single wiggle in between. And yeah, there will be some deeper ones in between, but the one we really want to sit are these, right? The big ones right here, over here. The ones that would get us from here all the way down to here, but we're not there yet. So, we leave that in. You have to draw the line somewhere. You have to draw a line somewhere. So, where were we? Yeah, you're attending next webinar, I hope. Thanks, says Chuck. You're welcome. And we're here, right? And don't forget, by the way, you would have made so much money by then. You'd be good to go, even if you're just holding Bitcoin or Ethereum, 10-15% down. In every crypto bull market, the majority of the gains, and that's very important again, happen in the final months. This is really crucial, right? See here, we talked about this last time. 90% of the gains in the last month, in 2014 were done in the last month. Here in 2017, 60% of the gains happened in the final epic month, right? And this is really where we are now, right? This is where we are now. We need to get above here and then reverse. Remember, guys, this is an annual chart. So we're long way away. We're long way away. There's plenty more juice to be squeezed here. And, the evidence is very clear. It's really very clear. We're not nowhere near a market top. None of our trend-based, alpha factors are suggesting a top right now. Not a single one. This is going to keep chugging. So, armed with the knowledge that that we aren't going to be that sucker buying the top. Who wants to make some fucking money? In the next and final webinar, I'll be showing you the final and finished system in all its glory. So you guys want to make some money or not? Nobody raised their hand. Well, you guys already share. Okay, here we go. All right, Dave, Tracy, Roberto. Hey, Roberto. And they're disappearing now. Denari, Jim, Ernie, Dan, Bill, Ricardo, Stephanie, Alexi, John. All right, I think we have consensus, right? Awesome. All right. So in the next final webinar, we're going to get to the final finished system, all its glory. And, honestly, when I grew up learning about all this stuff, you read about these, these idols, right? Those guys everyone was talking about. And they had, at least one claim to fame that they would be remembered for. Let's say Jesse Livermore, right? Shorted the 29 stock market and built like $100 million fortune with it. No, lost a lot of it later. But then, that was back, by the way, when the dollar was still worth something, right? Today's dollars, there would be 1.5 billion. As a trader, just as a trader shorting the market, without a computer, or technical analysis with, filling out paper slips. Or we have a guy like Peter Brand, who traded soybeans into a market, commodities trader. Similarly, Ed Sequoia, great trend trader, and Richard Dennis, Turtle fame. They made fortunes just trading commodity futures, right? And people wrote books about them. I have them. Or a guy like Jim Rogers, right? Trade along George Soros in the 70s, right? Say what you want about Soros, but these fuckers, man, they made 4,200% or something in 10 years. Okay. Now with crypto, we can do that in 2 years, right? Maybe 2 months, but you get the idea. Back then, that was something, and they're renowned for that. And outlier returns that people really talk about many years later. And these are long, once in a lifetime opportunities, seized and fully taken advantage of. And guys, I've never done this. And I've traded through markets and I've done well, but I've never really squeezed the juice out of it, and took it all away, right? And maybe this will be it. Either way, it's going to be a wild year, I think, and I really hope you guys will be along for the ride. Yeah, unless any other questions, let me see what we got here. You guys are fast here. After the next big 75 to 90% crash, it sounds like you believe that crypto will eventually make more big run-ups, even though so many will have been burned. Yes, I do believe that. This is going to come back eventually, because I think crypto is here to stay. I've been flip-flopping a little bit over the years, but in the last few years, in 2018, they could have killed it. But what sealed it for me is guys like, Elon Musk going in, and hedge funds getting in now into the game. BlackRock, when we talked that in webinar 102. I mean, what's going to happen with all that money? They also worry about, I think a lot of people, and not just me, are worried about what's happening to the dollar long term. I don't think it's going to die in right away. But long term, I think, we might have a problem here, right, Houston? And Bill says, I think I agree with Bill, who says it's too late to kill it. I think so too. In 2018, I could have done it because I was planning on actually doing something else with crypto in 2018, and I had to really postpone my plans when Facebook started completely prohibiting advertising of marketing of anything crypto related, and that kind of quickly trickled down to the other guys, Google and everything else. And but now these days, and then it really came roaring back, and I didn't think it would, but then look where we are now. I mean, so I don't think cryptos is gonna die. I really don't think so. I mean, the projection I'm seeing, in this particular bull market phase, I follow this guy Willy Woo. He's projecting 300,000 until by the end of this bull market in Bitcoin, and he's nailed it pretty well in the past. And then and it's going to crash and burn, and but we're going to be cashed out and sit at the beach, daiquiris, mojitos, whatever floats your boat, and that's it. I'm going to be at the mountain, so you guys can gather at the at the beach. But you get the idea. And then, when it comes back, we'll go back in. And that's the idea. That's what we're trying to do. So any other questions? If Bitcoin halvings every it's not about year. Okay, about 4 years, yeah. Will there be a super cycle every 4 years? Well, we only have so many halvings left, right? Until we get to 21 million, right? So I think the dynamics might change in the future. And then, we might have to revisit this, but I think we have at least another round in this, yes. So we've got a few more years to go, definitely. Sounds like you see a cycle. Bitcoin, Ethereum, alts, cash. Exactly, yes. That's exactly what that's Michael asking. Can you clarify, do you see us still in Bitcoin part or we're in the alt part presently? We are actually right now in the altcoin season. That's what, look what we've been doing, right? So we never lose, right? I wish I could promise that, but that's the idea. We'll be covering campaign management specifics in webinar 4. Yes, I will. If you can identify tops and then entry points later, why would you not short them? There's always some. There's always one. Manish, did you ask that question last time? Somebody did. Okay, it's a good question actually, because I've shorted markets, but crypto is too fast. It's too crazy, and I might in the future try my luck with options, right? But like just holding crypto short, no, I wouldn't want to do that. It's just too fast, too brutal, and even if it goes against you, you can get wiped out. I mean, it's really not worth the squeeze, and it's just too brutal. The velocity of how this happens, and the meat, really the fun part, the easy part, the easy game, right, is in the long direction. And actually, with most market, right? I mean, you look. Okay, another way of answering this, Manish. I know maybe a handful of people who've traded successfully through bear markets, and as much as most retail traders always, wish for a bear market, most of them actually get wiped out in the process. They can't hold through. It's just too crazy. Now, imagine that exponentially more difficult. Do you think how many people would survive that experience? I don't think many would. So that's my answer. So no, I wouldn't, and I don't think it's necessary. I'd rather sit it out. Whipsaw's brutal. Yeah, it is. Okay, understandable. Yeah, I hope it is. Let me scroll up a little bit. Have you applied this to the universe of shitcoins? Uniswap. Sorry, somebody was typing. Uniswap, Sushi Swap. No, have not. We're just trading the coins of 3 or 4 major exchanges. Bitrex, Binance, of course, Kraken, and so on. And that we have basically a common pool of coins, altcoins that perform the best. We didn't plan it this way. I was running against each exchange, and then I was wondering how this would pan out. If I ever would consider doing a signal service, and then I had this glorious idea of well, maybe let's see what happens if we just trade the most popular coins, and actually has the best odds. They have the better performance. So hey, then let's just trade those, right? Not the coins that people maybe want to trade, but the ones that actually have the best performance. So we answered this, brokers, Coinbase, besides Coinbase. Kraken is good, right? Binance is good. Coinbase, we have limited options in the US. If you have a second citizen, or if you live in outside US, you have more options. But if you can, Binance US, I like it. That's what we use. Okay. How would the digital coins issued by central banks, digital euro, can influence this environment, you think? It's a very good question. I think there will be quite a clear separation between these types of coins, right? There's the kind of Ripple stuff, and then there's these, the Feds and other central banks are now getting into the game here. I think there will be a clear separation, at least when it comes down to the community. Why would the community as a whole? The community, as you know, is very religious and very purist about it, and I don't think they're going to all start streaming into this. It might catch on later, kind of like the tide, floats all boat. idea, but there might be pushed up with that, but I'm not really sure about that. So I cannot really answer the question. And we shouldn't care about too many of these things. We would care if we would change the market dynamics, and I don't think it will change the market dynamics. It's kind of a Me Too approach, which is a little bit late. And I think in my mind it defeats the purpose of why people get into crypto in the first place. Well, what would you then just hold dollars or euros or something, right? Okay. Fiat is still fiat on blockchain. Exactly. Thank you, Bill. Can I use that? That's pretty good. Yeah. What would I care? What I would care about is if there's a government intervention on stopping Bitcoin USD exchanges to happen. Yeah. Okay. It might. But again, why didn't they do that already? Right? I mean, why wait until they start until the SEC starts approving ETFs and everything? And it's too many have invested. Even a year ago, I would have said, yeah, this might happen. And I kind of was sort of expecting it, but right now, I don't think so. I don't think it's too late. Don't call me on this, okay? Because, it's famous last words, but I don't, the probability, that's what it's about, right? I don't think it will happen. Even then, probably people are going to find workarounds. Okay. See if I have anything in the QA, actually, because I've just been reading through the chat section. In bear markets, how long have they last on average in cryptos? There's no average. There's either like one could be a year, one could be 6 months. It really depends. What I did notice is that there always seems to be like kind of a change in perception at the beginning of years and towards the end of years, right? So there is some kind of a regime change happening. I don't know what that is yet, and I don't want to really call it yet, but that's something that popped out to me. If you're looking at, that was, 2017, right? End of the year. And then beginning of 2020 was okay. But for altcoins, really, they start coming in. That's actually related to altcoins, by the way, really coming into their own really early in 2020, right? Actually, the beginning of the first week. So there's some kind of relation, and I'm still kind of digging into that, and it might become officially become part of the system later on. Robert says, just amuse me. Tops and bottoms are predictable in all cryptos. I have to ask. I'm not sure if that's a question, but he seems to be amused. Is there any relation to major equities market spillover of psychology to affect the system? Very good question, actually. I think manias kind of sometimes come together. It's kind of a general, especially with all these people locked at home, nothing to do, maybe not even working or working from home. There was kind of like, it was kind of the perfect storm, right? If you would call it. So I'm not sure. I can also imagine an inverse scenario, and I've thought about this actually, where the stock market crashes and everyone starts, heading for the hills and then heads into gold, silver, precious metals, and potentially also crypto. We'll see, right? The crypto market in the past, we haven't had a really strong bear market. We had a 2018 correction, a little bit, right? It didn't affect crypto this much. Some actually pushed into crypto in 2017. And then we lost some in 2018. So there might be some correlation. But is it directly related? No, I think it really depends on the conditions. Money has to go somewhere. And if the dollar is crashing, potentially, which might happen, because I've seen some weird things in the dollar, right, lately. And we are still trying to figure out how the dollar is really going to swing in bonds as well. When the market takes a tumble, and I saw bonds actually pop higher, but the dollar wasn't really coming along, or the other way, right? Then the inverse happened as well. So I think it's still kind of, the market is trying to figure itself out. I think maybe the bear answer would be, I think that people really they don't know where to put the money in these kind of situations, where to escape to. In the old days, it was easy, right? Bonds, gold, silver, and maybe diamonds if you could, and then that's it, right? I mean that was kind of the escape, and the dollar, but these days now we have crypto, and maybe what we've seen in crypto is also related somehow what's happening with the dollar. So okay, Binance versus Binance US, no, it's the same. No problem. Too many people die, all bets are off. Yeah. Will never newer cryptos coming into the market? How will that affect all of what you've done to predict using your current algorithm? Very good question, Roberto. Not at all. Because look, I mean, think about it, what we're doing. We're always picking the strong players, right? And yeah, there's always newer cryptos coming in, but my scripts actually, they pick up goes through all the exchanges that we're tracking. And then it picks up the ones that they share, right? The shared coins. There's a shared pool of coins that they all share. And then from them, it picks the strongest. So we're really going with the winners here. And a new coin that comes in the market is not going to be the winner right away. It would not hit our criteria. And yeah, it might be one of them that's running off. But if that one runs off, I don't think that really the big dogs, in altcoin, with the top dogs in altcoin, are not going to take off. So it doesn't affect us at all. Okay, anything else? Advanced question. If we get a crypto account and fund it, what do we do until your service is up and running? It's going to be up and running very soon. Do we park in Bitcoin, or is that risky having to run up from recent lows already? No need to answer that just now. Right now, I would probably just put it in Bitcoin, but that's not a decision you have to make for long, because Signal service is basically up and running. Didn't want to get too much away, but yeah, it's coming. I mean, I already mentioned it today's email. My marketing mailers. So with DeFi growing, there are more and more ways to earn off your Bitcoin. Maybe people won't sell to change the mindset of whales. It's a market in flux, right? But I don't even know how I feel about DeFi yet, right? I mean, it's definitely in theory a good idea, but let's see where they take it. Yelling will help. Yes, it always helps. I yell shots every day, and they immediately respond. Have you decided on the fee for the service? Yes, I have. Minimum recommended account size for the Signal service. Well, it should be more than you're actually trading. Yes, but I mean, remember, I'm halfway joking here. We traded a $5,000 account. And we traded that up, right, all the way. I said, so sorry, 70,000 to almost $1 million, and I think it was a $5,000 account, right, to over $100,000. So, I mean, it doesn't have to be a fortune. Of course, we got lucky. Okay, I'm not going to say that we're getting lucky with the alt season right now. Alt season is sweet, sweet sugar, but we're not done yet. So. Okay, you could make interest on Bitcoin or Ethereum while you hold with DeFi. Oh, let's not go there. I don't want to let's just talk about the system. DeFi is a completely different ball game, and I don't think it really affects our system at all. And neither did the micro futures, that just came out, affect our system, and I don't think it will. Okay, anything else? I think that's it. Well. That's me signing off. Thanks again. Really appreciate you guys coming, taking the time. Where are we here? I don't know if I'm probably close to 2 hours now. No, 1.5. I think I'm getting better. All right. Thanks, guys. I really appreciate it. Okay. See you next. See you next Tuesday. Yeah. See you next Tuesday. Right. It's going to be at the final webinar is going to be on Tuesday, the 9th at 4 p.m. It's going to be really late for me, 4 p.m. Eastern, so that's going to be 10 p.m. For me, I'm going to put little, toothpicks here to keep my eyes open. Okay? Thank you. Have a nice one. Cheers.